was going to say that as we talked about humanity and AI, I was saying what is the opposite of AI? Any volunteers? What would be the opposite of the diametric opposite of artificial intelligence? Thank you. I think there's a lot of people who seem to be very prompt at it. Human stupidity. So it looks like we all have a lot of that experienced. And when Nikhil talked about doing BPR 20 years back, and then we look back and what it is right now, I think there's a huge difference to things as we operate, be it process, be it technology, or be it for that matter, how humans end up dealing with situations. So I actually, as we get ready to we recognize that we are running a little late on time, but we'll quickly make up for it, as the National Railway always claims. We will start with this first panel discussion. Well, as you know, the topic for today's discussion is about, the panel is something that is reflecting the theme of the discussion of the day, or the summit, which is building a future-ready bank. Many years back, I read this, I'm sure many of you have read this book, The Future Shock, by Alan Toffler. And he actually wrote something in the 1960s that we all are getting to experience now. What happens when future arrives before you're ready for it, right? And that's basically what future shock is. And I guess we are all experiencing what it is, and how ready can we get to build a future-ready bank? Well, that's the topic of the summit. And the first panel is actually about building a business leader's perspective as we talk about future of banking. So I do have very senior, eminent leaders in the industry joining us for the first panel discussion here. May I invite my panelists, ladies and gentlemen, please put your hands together to welcome the co-founder and board director at ClearBank, Mr. Charles McManus. Charles. My second panelist of the day is the founder of Fairgrowth Group, but more importantly, the former Deputy Mayor of London. He was a Deputy Mayor from 2016 to 23. Please put your hands together to welcome Mr. Rajesh Agrawal. Rajesh. My next panelist of the day is CEO of a very interesting bank, a bank that talks about affinity, but also talks about Africa and finance. Please put your hands together to welcome Mr. Jason Oakley. Jason. My fourth panelist of the day is, he's the CEO of and board member of a very important bank, but I have to admit that before he was the CEO of this bank, he was my client many years back in the UAE before he became the CEO of Habib Bank Zurich. Please put your hands together to welcome Mr. Satyajeet. And we talk about this whole discussion, be it the welcome note or the interesting discussion that Nikhil had for us was on AI. How can I not have somebody who lives, breathes, and actually has AI in the name of his company? He's the founder and CEO of Kiya.ai. Please welcome Rajesh Mirjankar. Rajesh. Okay, that's going to be a very interesting start for the day, and this discussion, I guess, is more than just about, and I'm sure we'll not focus only on AI, which I'm going to actually wait for who opens the topic or who could do one conversation without making a reference to AI. Let's keep that bet on the table. With that, I'm going to start with you, Charles. We keep talking about the future-ready banking, and Nikhil just talked about how things are changing, and you don't do changes for the sake of it. But one thing that we see today is that as banks go through their changes, some are genuinely reinventing, but some actually are simply digitizing. So if I was to ask you, in your experience, which parts of banking do you see truly getting reinvented, and which parts do you think are simply getting digitized?
A great question, and good morning, everyone. Pleased to be here again. A great panel. So first off, definitions. Digitalisation to me is same economic model, but essentially sort of doing delivery better, more efficiently, faster, cheaper, better. And of course, everyone's been doing that. Innovation and reinvention is something very different. And banking products actually going through that change, really important, and we'll talk about it some more. The slide was brilliant in relation to 6, but to me number 6 was the most important, agile and innovation. Banking products through the distribution that we now have, and banks surviving and being profitable. Reinvention, therefore, is different economic model and actually different parts of the value chain. So as we know, as bankers, the value chain is fragmenting. It's changing very fast. And where banks play and how you make money is really, really important. So let me bring that to life with a passion of mine, essentially in relation to payments. If you think about payments, it used to be a bank product. I grew up in an investment bank, trading floors. It was something that operations and settlements did and just happened. And it was all about credit derivatives and the new product, essentially, in the capital markets. FinTech revolution coming, payments actually fundamental. And now we've got a war going out in the world in relation to payment rails. And actually through that uncertainty word, it's accelerating on so many different dimensions. You've got the former CEO Barclays talking about the UK should now invent its own card rails. And Visa and MasterCard have spent years and billions building a global network in relation to card rails. And they don't want to lose as disintermediation now takes place, because guess what? Using technology, smart contracts, and the 2 letters I'm not going to mention, in relation to all that new and blockchain, allows essentially banking to be delivered in a different way compared to the old tech stacks. And so in payments, we've now gone to programmable, but now we're moving to agentic payments. Not only sort of the method of delivery, but now the channels and the rails that it's running on. And so we've got lots of forms of now value transfers using different mechanisms of money, of holding value. And you can see it, right, all over the world in relation to not just the central banks getting into central bank digital currencies that the US has said no to, but actually the private sector now in relation to tokenized deposits and stablecoins. Stablecoins are proliferating. They are all on different blockchains. And they are primarily, particularly in the UK, where banks are not allowed to issue stablecoins regulatory. It's only non-banks on the VASPs that can actually issue a stablecoin. But in the US, under Clarity, and essentially the acts there, you've got this whole growth that we've seen in non-regulated stablecoins, and Tether and the rest. Now under the new rules, OCC will approve, and there will be regulated US dollar stablecoins coming out into the world. The UK banks, for example, are obsessed with tokenized deposits. They want better wholesale interbank settlement real time. They're not interested in stablecoins. The non-banks going after cross-border FX and payments exploding in relation to that market. And regulatory, the banks are not allowed to issue stablecoins. So you've got the FinTech challenge banks like Clearbank. We've tried for the last 2 or 3 years to put up a sterling, 100% backed, Clearbank issued sterling stablecoin. We are not allowed to do it as a bank under the regulation. Why? Because the Bank of England is actually concerned that bank deposits, which are the creation of credit for UK PLCs, so 80% of bank deposits are lent in relation to corporate PLC and mortgage market, etc. And the worry is that if they start issuing stable coins, those funds will move from deposits to go into gilts. My argument has always been actually you should put a cap in 50 billion, whatever it is, allow certain banks to play, issue sterling stable coins, and for example, US, UK trade flows, you could use sterling US dollar stable coins in terms of cross-border. The Treasury agree with that, but unfortunately the Bank of England is holding fast. Anyway, the point about payments back to leadership and the question, that war is raging, right? The global players do not want to be disintermediated. The banks could be disintermediated on the basis of wallet-to-wallet transfers. You no longer need a bank, and our whole world is moving to marketplaces in the distribution channel. And if the bank is not embedded in those channels, then be it, and actually in the last 6 months, I know it's coming, the CEO of Revolut was talking to me about X, Google, Walmart are all about to issue US dollar stablecoins. You will have UK consumers on those platforms translating essentially and using dollar stablecoins if we don't grow up in the rest. So innovation, absolutely fundamental. And it goes to lending and private credit, it goes right across your banking product range. That the bank knows where to play and how to play to be relevant.
It's fascinating, Charles. So in essence, I mean, if I was to paraphrase, I mean, the one area that you clearly see getting reinvented, not as a bank, but as an ecosystem, is the whole payments and stable coins, as you just talked about, which is recreating, let's say, the universe of banking in every other element that fits around it. And unless you actually are being relevant, then you got to be redundant. I mean, that's the message you're giving. Very fascinating. And in fact, that's something that I want to take to you, Rajesh. You know, talking about staying relevant and talking about being up to speed on what's happening around us. Who better than you to ask this question? You know, someone who's been a former deputy mayor of the country, of the city. What do you see are the key factors that will make or break or will make either London relevant or irrelevant in the next 5 years to be the global financial center, given what's happening all around us?
First of all, good morning. Thank you very much for that question. Good morning, everyone. Just look around you, the greatest city on earth, London. I mean, this is a fantastic, fantastic city. And look, London will continue to stay relevant. And I'll tell you why I think that is the case. Number one, just look around in the room, huge amount of talent. So London is a talent magnet that comes from our universities. London's got more universities than any other city in the world, over 60 universities, and we are the only city where 4 universities feature in top 30 universities in the world. And I'm not even counting Oxford and Cambridge, which are not far from London at all. And then, of course, we get talent from around the world coming into London, so we've got to make sure that we continue to attract that best talent from around the world. So our immigration policy, etc., must continue to reflect that. Number two, Charles, you rightly mentioned innovation. London is so innovative, it's incredible. All these talent is constantly innovative. I mean, you mentioned derivatives. Derivatives were invented here in London. We talked about FX. More than half of all the FX trading volume in the world happens here in London. I mean, London is a city of innovation, and that's very important, especially on frontier technology. So you look at AI. I said it. But I have to say it. I mean, London's turning into the AI capital of the world, or it's certainly of Europe. There's huge amount of innovation happening here. Government has launched the AI, sovereign AI fund, Quantum, which will impact financial services and banking significantly going forward. Again, London's actually leading the way. So the best innovation in quantum technologies are actually happening in and around London and UK and so on. So we remain sort of on the sort of frontier of these technology. Capital is another thing. And of course, we've got great, but that's something that we could do more work on in terms of our listing rules, for example, in our capital markets. But certainly there's now more private money available than it has been ever before. Government is actually putting more money in. There are more plans of government to actually invest money in private sector and in startups. And one of the ways the government is actually doing that is through procurement. So they are having all these innovative companies being given government contracts because one of the challenges for the government has always been how to procure innovation in it. And that's what they're doing. Connectivity, I'm going to straight after this actually jump on Elizabeth Line, which is new and shiny still, I suppose. It's a 20 billion pound project that was delivered here. It's a feat of British engineering. And I'm going to go to Heathrow, which is one of the busiest airports in the world. So London remains hugely connected. I don't need to tell you, but most, London's time zone actually overlaps with 95% of the world's GDP. So in the effect, anybody who comes from the trading world knows that by the time Australia closes, London is open, and by the time London is closes, the other parts of the world are open. So 95% of the world's GDP overlaps with London's time zone. But most importantly, it's about trust. And our legal system is second to none. The English legal system, the rule of law is hugely important. Our regulators, the FCA, etc., are very supportive of innovation and fostering of new ideas to the sandbox approach, etc. So that trust is hugely important. Our legal system. London is also home, by the way, to the largest number of international law firms. So all these things, and if that is not enough, by the way, so a lot of non-AI things in London are amazing, which is the, O2 is the busiest concert venue in the world. So if you're, amazing food-wise, I wouldn't have said that 20 years ago, but London's the food capital of Europe. Come on, I mean, the food in London is far better now than it has ever been. So loads and loads of stuff is happening in London, and I think London will continue to reinvent itself and stay relevant.
That was almost a campaign speech. I have to. I love it.
They don't call me the traveling salesman for London. I mean, you asked for it.
I did. I very much did, and thank you for that. That was indeed compelling. And you did make your reference both for AI and non-AI, so I grant you that as well, Rajesh. Well, I'm actually going to take that part of the discussion into you, Jason, and I think this has been always the case, a question that has been posed for quite some time. When we did technology strategy for banks, and I'm talking about let's say 20 years back, the one thing that was a given was that you have a business strategy for that's drawn, and your technology plan dovetails from it, which is almost an axiom for a long time. But I want to come to you now and say, look, is it about time when you actually would, and if I was to pose this question, do you see, technology as an enabler of strategy? Or do you really see technology driving strategy in the ways that we are talking about, where future of banking is heading towards?
Morning, everyone.
You can take this.
Yeah, morning, everyone. Well, I think there's a little bit of a false premise in terms of trying to differentiate one camp versus another. So I don't think anybody's in the room from Thought Machine. I know there's one of the sponsors. Is anyone from Thought Machine in the room? Right. So Thought Machine is our core, and it is truly brilliant. Having been in the industry 41 years and actually been involved in 3 new banks, what we've got with Thought Machine is an open loop platform using smart contracts. What that does is it increases my agility and flexibility. It allows me to do things that legacy banks can't even dream of doing in terms of our platform. Now, interestingly, Afin Bank is the only genuine new start bank in the last 2 years authorised by the PRA and the FCA. We've had 2 other new licences, Vida, which is a long established, it was a non-bank lender that's now become a bank, and obviously Revolut most recently. And the Revolut model is really interesting, and I know Charles referenced it earlier, because what you've almost got is a VC mentality about tech and sending off teams, doing sprints, coming up with business cases, testing them. They may fail, they might succeed. And I read in the press that maybe they're running a little bit quicker because the ECB has slowed them down a little bit in terms of product releases. But what's quite interesting is when we talk about a future bank, what is a future bank and where does tech sit in that equation? I think I'm seeing an increase in polarisation between what I would call traditional banks, and for that traditional banks is lending-led banks, banks with a balance sheet where obviously capital is important, which is difficult, but essentially building revenues around loans and deposits versus an income model where if you look at Revolut as an example, but I could equally apply it to Monzo or some of the others, their lending books, like I think their loan to deposit ratio is like 6%. It's like almost irrelevant. So it's not factoring in. I suppose one of the questions for me about that model is at some point you have to pass the tipping point. But just coming back to Thought Machine. So what does Thought Machine do? In terms of tech, it transforms the art of the possible. The cost, the barriers to entry that were there historically are coming down. So technology is absolutely pivotal. It's really important. But also, Kevin made a really, really important point. Yes, RAM strategy is critical, but also culture and leadership. You know, what sort of bank do we want to be? And you know, at the very start, I've now, as I say, I've had the pleasure of working on 3 new banks. And when you set up a new bank and you literally have a blank sheet of paper, that's called your customer base, then boy, do you have to start from a customer-driven, customer insight perspective. And so one of the dangers, I think, with technology is the risk of commoditisation. We're losing the intimacy, we're losing the individual relationships and understanding of customers. So for me, you know, of course, strategy in the context of raison d'etre, purpose, what are we here for, what are we trying to do, what problem are we solving, what kind of customers are we trying to attract. But of course, technology allows me to do that more cost effectively with greater agility and the economics fundamentally change. Afin Bank, which serves the underserved, we target markets that are poorly served, often difficult to fulfil. So take, for example, the diaspora in the UK. It's actually 9.6 million diaspora in the UK. But if you've been here for 6 months, try to get a mortgage. You know, good luck with that. It's incredibly difficult. Even though you might be incredibly talented, great career professional, great earnings, it doesn't make a difference. So we're targeting markets that the traditional banks have largely ignored because they're difficult to fulfill. But just one other quick example in terms of the importance of technology. Our technology partner day to day is Vacuum Labs, which is based in Bratislava. And we've had an incredibly good relationship with them and we continue to have that. We're, in the next couple of months, going to launch an AI, sorry about that, Ram, AI-led.
You passed that stage now.
An origination and servicing platform for the mortgage intermediation market. Because you look at those platforms and a lot of them haven't been invested in for a very long time. So tech allows you to bring a different perspective. It allows you to drive economics that you couldn't do before. But really, at the very heart is your customer centricity.
Got it. So it's in a sense what he's saying here is, Jason, it's customer centricity. Technology allows you to do what you would call as making the art of possibility, and I'm borrowing that phrase of yours. And you've used some very interesting examples of Thought Machine. Well, we just increased your sponsorship value for the advertisement we just gave you. But on a more serious note, it's very fascinating about the reference you actually made about ultimately, be it strategy or technology, it's about delivering what your customer needs and not being commoditized about it, right? I mean, that's a very, very important comment. I'm going to take that comment to you again, Satyajeet. I mean, this is we are now dealing in a situation where there is a lot of action all around us, to put it mildly, and there is he just talked about the African diaspora, but here we're talking about geopolitical context being very, very important, especially for banks that are dealing with customers that are increasingly dealing with global business models, right? So if I was to go to the theme of the discussion again, future of banking, what do you see banks, or how do you see banks repositioning themselves or recreating their value prop to their customers in this context, from a geopolitical and also from a trade flow context?
Thanks. Morning, everyone. Let me start off with a few things that I picked up from Kevin's presentation. So you used the dreaded word 3 times, but you used the other word, which was trust, 4 times. So you have advantage trust. So let's just start with that, and I think that's the core of what's going on. There is an issue with trust around the world, and if I were to just talk about trade flows, the trade business has become completely fragmented. Regional trade is becoming much more of nature versus global trade, and there are many reasons for that. And some of it is geopolitical. I don't think we can put all the eggs in the basket and say everything is geopolitical. I think it comes up with certain disenfranchisement that has happened across this. And so where does a bank come into this play? And by the way, Habib Bank AG Zurich is a Swiss bank, but we do a lot of trade in the Middle East. 1974 is when the first business was opened by Habib Bank, which dates back to 1800 in India when they actually started the business. So a little bit of a history lesson for you all, in case you're wondering what Habib Bank is. The core of that is how are the customers looking at it, and I think Nikhil had mentioned that apart from those 7 things or 8 things that he had in his last slide, the customer is core. So what is the customer looking at? Today, if I talk to a trade customer, they're not just looking at China, but they're looking at China plus 1, or EU plus 1, or US plus 1. So I think one area that's happening is that the client is looking a little more than the one big partner or one big cross-border trade corridor that was there. And banks therefore come in quite clearly. And clearly, I worked for Citi, which had 100 franchises around the world earlier, and therefore the great trade corridors were quite clear. But for a smaller bank right now, like Habib Bank, we've got about 11 markets that we play in, and those trade corridors come in between. So we have not only just become the bank which would lend and provide liquidity for a trade flow, but also become advisors in terms of highlighting risk, looking at FX, looking at the time to make a payment, or even a documentation review. And by the way, the documentation piece on trade is still very nascent. Still, you go through a lot of reviews of discrepancies and things like that. Talking of mortgage, but go and have a look at an export LC which you're going to discount, and you'll see the number of UCP requirements which are there. And guess what? Somebody who's been there for 20 years is actually still looking at it. So there's way to go over there. And I think there is going to be a huge disruption on that, and the banks like ours are getting ready for it, because from there to an optical recognition to something which you can tell, use the word AI, will actually, if you are able to give those right prompts, I think those things will come out. The second important piece that is coming out over here is looking at what are the areas that the regulator is looking at. And we mentioned about this beautiful city, we mentioned about all of this that is happening, and London being a magnet, but London also provides the regulatory, standards which are probably most superior and better than any other regulator in the world. And I take this also with a pinch of salt that there is a lot that is happening. I mean, our home regulator is the FINMA. We deal with the Fed, but when the PRA, the FCA, or the HMRC, or even law enforcement comes in, I think they are probably leading the way. And these sandboxes which are there, even for small banks like us. So that's very, very critical to understand what are the risks which are there and how do you play with the regulators' expectations if you want to survive in a competitive 320 banks we saw on the slide earlier. Finally, I think it is all about change, and what comes to my mind is Darwin, and he said survival of the fittest, but the fittest just doesn't mean the strongest or the wisest or the most intelligent. It is also the species which will adapt to change. So I think these are a few things that
No, that was brilliant, Satya. So, I mean, the last point about being adaptive to change is essentially what we're talking about as today's theme, which is being future ready and being change ready. And I love your comment actually about the example you took about how the ways of doing things are changing, and I was reserving all of this AI talk for you, Rajesh. I mean, but some of them still stole it away, but I'll still bring you. You actually are the leader in the AI space. You've been at it for quite some time, as I know, and we've seen these so-called hype cycles, right? I mean, we've seen it with the dot-coms, we've seen it with many other such hype curves, and then what you actually see as the stable state. So if I was to ask you this question, right, and as we can see that we couldn't resist but have to mention AI, even though you were forewarned. So it tells us how we are all embedded in this journey. Are we past the hype cycle? Are we still there? That's question one for you. And two, if banks have to be conscious about what is truly unlocking potential and what is quote unquote hype, how does one go about looking at it, particularly as I'm getting to be quote unquote future ready?
It had to be the other Rajesh to actually mention AI first, so I did that. I think from a perspective of artificial intelligence moving out of the hype cycle to adaptability is most certainly something that's happening, and it will eventually move out of the hype into full-fledged adaptability. And I would like to believe that there will be something new that will come that will change the word artificial intelligence to something else. But I think from what I see as positive change in the way artificial intelligence has emerged over the last couple of years is that one, it has moved away from being a monolith idea of a chatbot or just something that can talk to someone to a concept that can adapt by communicating. So we've had the concept of orchestration platform like MCP from Anthropic, etc. that has come in, where you can bring in collaboration between agents and then deliver a result. So that is, I think, one of the most apt ways of adopting AI within an organization to deliver the benefits. So it's not about saying that I'm going to just put out a bot there, or it's also not about saying that I have an enterprise AI system. There is nothing like an enterprise AI system. It is all point solutions. It is, when we say artificial intelligence, there can't be something so cohesive that it can solve all problems. You have to deal with it by augmenting knowledge and treating every use case differently. So I would believe that there will be, from the adoption perspective, we've seen a KYC agent, a fraud agent, a transaction agent, as Charles mentioned, payment agent coming through, agentic payments happening. And each of these are going to render benefits. So I think that is how gradually AI will move out of the hype cycle to adoption. adaptability. But importantly, when we look at the other aspect, it is also about the technology getting better, where we see large language models being more powerful today. You had earlier the word hallucination being used so often. I in fact mentioned it in my last year's panel too often. But I think that we've come out of that era also pretty much within a year. Today, the LLMs have the capability to contain a large volume of data, and that gives businesses the confidence that it can run logic, it can retain data, and it can gradually build that intelligence consistently. The third aspect that's working around is the aspect around the need for explainability, right? And that is coming through as well, where you are able to derive output that is explainable, and make sure that the regulators are happy with it. So, in all, if I were to say how this cycle will work through with AI coming out of hype cycles into adaptation, is going to be one where we will see, and this is something which we've spoken about since morning, is the trust element. When you look at trust, we've seen, and I think Nikhil mentioned that in his research paper, that trust is, banks are down there when it comes to trust. And let's just see where the points are for that. Right? I'm, of course, on the vendor side, so I'll just keep just a few points on that.
Sure.
One is about saying, you look at the development within the UK. The news that was in the papers just a couple of weeks back was the formation of the Robert Lloyd Commission. And the purpose of that commission is to find out what will happen with customer service, because we've seen 6,700 branches closed. So one end, banks have moved towards digital inclusion. The other end, we've gradually moved towards physical exclusion, right? And I think that trust element is something AI can sort of bridge. And that comes to the point that it can communicate, it can adapt, and importantly, the communication is almost human-like. So I guess somewhere that's an opportunity for someone to use. Most importantly, vendors like us and banks who possibly will be our clients.
Interesting.
The second element is about the aspect of explainability, where there will be aspects. We've seen the whole hype around Mythos and the launch of Fable 5. And for all those who thought they can start writing code, they suddenly find out that cyber security and biotech were removed as a filter from the Fable 5 release yesterday. So there is something as a hype coming up there. And that's why I think regulators will insist that on adoption of AI, you need to have explainability. And the last element is going to be about the human in the loop. We have to remember that we are not talking about AI replacing humans. We are talking about humans using AI as a tool. And so the human in the loop and how you bring these processes is going to be very important. As AI is adapted, I do see a way in which there's going to be a gradual phase of moving from manual processes now to digital services, and then to an autonomous processing using AI, but it's not going to be something where the human will disappear. There will be decisions that humans will take, and there is a different credibility to human expertise, especially in banking, that will continue to remain, and the need for that will continue to remain. So I think these are the three elements of trust, explainability, and the human in the loop.
Got it.
That will help.
No, this is brilliant. Trust, explainability, and human in the loop. And you talked so much about the agents, and I couldn't but resist Rajesh, the other Rajesh. We're talking about agents here, and the most world-famous agent was the last known was in London, right, Mr. Bond? Yeah. So I guess we are talking about and I have been given some very nasty signals from back at there that I'm running short on time. So I'm going to wrap this round with what I would call as a rapid fire. You all have 30 seconds to answer the same question. So I'm actually going to start with you again, Charles. If there was one feature that you think and you had to predict one defining feature of what a future-ready bank that will make that feature will make all the difference, what would that be? This time you're allowed to start. Whoever says AI can go first, but the others can't repeat it. So yeah.
Okay, start of 30 seconds. I'll try and do it with it. So to me, we've heard a lot, and it sounds management consultancy and the rest, but value chain fragmentation, right? Geopolitics, whatever the agenda is in relation to own account dealing, domestic, etc. Value chains are fragmented. Banking was all about distribution, branches, all of that. How's the future distribution model going to work? And to me, it's all about embedding. So how is bank products going to be embedded in the new world to capture the flow? That is because non-banks, all the rest, future of banking used to be about data, it's about distribution, still about all those things. To me, it's about
invisible but omnipresent.
Relevance in relation. Where does bank? You make money in a toll gate. Whenever you design something, you need to make sure you're a toll gate to get paid. How do banks do that in the future?
Fantastic. Being embedded is the key. Yeah. Rajesh?
You stole my lines actually. But no, absolutely nice. Embedded, but so intelligent, embedded, and personalized. I think that's quite important. And I have to say this also, I hope it's fairer as well. And when we talk about the systems, it takes the human bias away from it, and it's fairer, which we know that a lot of AI is also sort of replicates the human bias.
Got it.
Particularly around decision making, sort of lending, etc. So I think, but also on the sort of financial crime, I think there is a huge amount that can be achieved.
So being sensitized to financial crime and personalizing your offerings is what you would say is the critical factor that you would see. Over to you, Jason.
Thank you. I would sum it up as learning velocity. So future banks need, obviously, to test and learn, they need agility, they need to be innovative, but they can't forget the criticality of customer centricity and how that overlies with culture. So the winners are the ones that can learn and adapt and recycle.
That was almost going back to your theory there, Satya. Winners, those who adapt are the ones who survive and thrive. Thank you, Jason. You?
So I'll probably take a stab at sustainability, which is quite important. Banks can do a flash and do something, or so customer relationship sustainability, the regulatory requirements of sustainability, managing in terms of your revenues as a firm to continue capital sustainability, and more importantly, again I mentioned this in terms of trust and being able to be there for the client. So you have to have a sustainable model which includes all these things and wonderful things that you spoke.
Fantastic. I think the trust is emerging to becoming a very, very critical, part of this discussion. Thank you, Satya. And you, Rajesh?
I think I'll involve my closing statement again with around trust. But I think the way to go around it would be to have a customer-centric approach. The winning banks will be those who will use their human expertise augmented by artificial intelligence to make sure that they can win the trust of clients.
So it is actually about humans being augmented by technology and not technology with human in the loop.
That's right. Yeah,
interesting. Well, ladies and gentlemen, unfortunately, I will have to draw the curtains on this. It was a fascinating conversation. Can we have our hands put together to thank this